Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players are doing in the market and how they are positioned. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical monthly support and demand area. From here, in fact, all this previous rejection to the upside was created again here, so we can see how multiple times the market has tested this level and respected it as support. And now that the market is testing the exact same level again here, we could expect once again the market to respect this area as monthly historical support and demand and reject it to the upside, as already happened in the past every time that the market tested this exact same level. So for now, let's keep that in mind and move to the most recent price action that the market has been creating here on the monthly time frame. In fact, what we can notice if we zoom in into this area here of price action, what we can notice is that the market has been creating in inverted head and shoulders, with the left shoulder here, the head here, and the right shoulder here. And the market is now testing exactly the level at which it had created the left shoulder, which is an area of monthly support and demand. Also, from a pattern standpoint, we can notice a clear impulse followed by a correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see that we have an area in between the 0.618 and 0.786 Fibonacci retracements, which is a quite strong area of confluence of support and demand, from which there is definitely the possibility of a potential rejection to the upside. So the monthly time frame does seem quite bullish, with confluence of support inside of this area. Dropping down on the weekly time frame, what do we see? Now, here on the weekly, we can see that in creating this move to the downside, testing that confluence of support, which, by the way, when you have a confluence of support area, there is an increased probability of seeing institutional longing because you have multiple layers of support inside of the same area. In creating this move to the downside into that confluence of support, the market has also created this M pattern. And in general, after the creation of an M pattern, what you would expect is a potential rejection to the upside, completing the M pattern at the neckline, which is the previous support turn resistance. So here in the weekly time frame, there is definitely the possibility of a potential reversal higher for the completion of this pattern at the neckline. Dropping down on the daily time frame, what do we see? Now, from a daily standpoint, so far, the market has created exactly what you would usually expect in a situation like this. First, we had the creation of this M pattern here, and I spoke in fact about EURUSD when the market was at this level, and I explained all the reasons for which we could expect this rejection to the upside, completing the M pattern at the neckline, which is in fact exactly what the market did with very clear precision, testing exactly the completion of the pattern zone and then rejecting it to the downside and respecting it as resistance, which is what you would usually expect. In fact, after an M pattern, you would expect first the completion at the neckline and then the market to respect that neckline as resistance. And I will link in the description that previous analysis in which I explained all the reasons for which from here we could expect this push to this level. I will link it in the description so you can go and check it out for more free education. But at the moment, what do we have and what kind of structure the market has been creating here on the daily time frame? Well, before we go more in detail into what we have from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing precisely on the euro. Now, what we can see here is that with the last reports, in the long run, institutions were increasing their net positions. We went from having minus 9.9k net positions, so a negative net positioning, meaning that institutions had more shorts than longs, with 177.2k shorts compared to only 167.2k longs, all the way up to now having a positive net positioning of plus 67.8k net positions, so way more longs than shorts, 188k longs compared to only 121k shorts. And now, just with the last report, net positions are starting to get slightly decreased. So in the long run, institutions are bullish on EURUSD. In the short term, they expected some bearish price action, which is in fact exactly what the market has been doing so far. However, it is very clear that in the long run, institutions have shifted their positioning to the bullish side, as we have just seen, going from a negative net positioning all the way up to a very aggressive positive net positioning of 43.6k with 187k longs and only 144k shorts. So there is definitely the possibility, since institutions in the long run are getting very bullish on the euro, and the push to the downside has already happened that they expected in the short term, there is definitely the possibility for a potential rejection to the upside, completing that weekly M pattern that we have previously identified. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now, back to the analysis. Well, here on the daily time frame, this area seems a level at which the market is overextended to the downside. In fact, it has also already completed a 5 waves pattern. In fact, if we count those waves to the downside, we can see 1, 2, 3, 4, 5. And usually after 5 waves, you expect the market to create a reversal. So everything is starting to align for a potential rejection to the upside away from this area. So especially if we will start to see once again institutional longing inside of this zone, that would definitely increase the probabilities of a potential rejection to the upside and completion of the M pattern at the neckline. So what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to an intraday bullish market at that point, I definitely wouldn't be surprised to see a potential rejection to the upside, completing that weekly M pattern at the neckline. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.